Hopefully everyone can hear me, and in my mind, this is going to be the most exciting hour here. First, we had AI and blockchain. Now we have crypto and tax compliance. So two things very close to my heart. But good afternoon, guten Nachmittag. My name's Stefan Stadlinger. I'm head of product here at Toku. It's great to be here in Berlin again. Thank you for the Gnosis team for setting everything up. It's also great to see some EU clients and learn a little bit about some things that I don't know too much about, although I know a lot about token and tax compliance. So here at Toku, kind of our goal is to make token compensation simple. And one of the key crucial things that we address is how to legally and compliantly pay people in tokens wherever they were located. And no matter what size you are, whether you're a startup that's just starting out or or a larger enterprise organization. And so to kick things off, I want to start off with a little audience poll. So if everyone could raise their hand if they've received token compensation in any form, that could be versus a salary, a bonus, token award, a token option agreement, really whatever. So I want to start gauging a little bit. So cool, probably about a quarter here, which is great. So we'll probably talk about a few things that resonate with that quarter. But for those who haven't, it's also great because we'll all learn something here today. So it's also important. And so today we're going to be talking about various types of structuring considerations when it comes to token compensation, as well as the resulting tax obligations. So starting off with the what, the why, the when, and the how. And so where we see token compensation is that it's relatively new, right? These structures, when we talk about token incentive awards, salaries, token salaries, et cetera, have really only been around for about 10 years now. And they're very complex from a regulatory and legal standpoint, as well as from a tax perspective as well. And one thing we do know now is that governments are slowly starting to catch up. Here in Europe, you see MiCA. In the US, which is a little bit slower when it comes to regulations, you see numerous enforcement actions, court rulings, proposed bills, IRS rules that are slowly starting to come up the pipeline. And regardless where any of that lands, one thing we know for certain is that governments are closing the gap on token taxes, and paying taxes on token compensation is going to be as important as ever going forward, regardless of where the regulatory landscape ends. Because I don't know, and as me being from the U.S., I don't know, and I don't think a lot of people in the U.S. know where they're going to end on the regulatory standpoint. But in any case, so and at Toku, kind of what our mission is to make that as simple as possible and really provide this end-to-end solution. Right now, there's certain Web 2 solutions out there that will address a portion of this issue. Like on the employment side, you have companies like Dealer Remote. On the grant administration side, you have companies like Carta or ShareWorks that will do a portion of it, but none of them are really crypto native, and they're only going to really address a portion of the problem regarding crypto compensation. And so when I'm up here and I'm talking about crypto grants, what am I even talking about? Well, we can go back to the Web 2 world and look at share awards, stock options that are very prominent in early stage startups or tech companies. And when we talk about that in the crypto world, it's the similar structures, but instead of getting shares in a company, you're getting tokens in a project, which is great, right? You align incentives and you're able to give your team the upside in your project, assuming your token price appreciates and your project does well, right? While they are similar, there's some differences, which we'll also get into as well. So we talked a little about the what, we talked about the why, and now we're going to go to the when. When should I start thinking about these things? Well, the answer was probably yesterday, and the reason for that is because the earlier you think about these sort of structuring issues, the greater benefits you'll have later on down the road, right? And so in terms of our clients, what we work with some early pre-token launch startups to some of the bigger L1s that have a globally distributed team. And the reason why it's important is that depending on the structure you choose at the right time of your token, whether it's pre-launch or post-launch, can potentially save millions of dollars of tax incentives of tax payments for both you as the grantor of the tokens and the recipients, your employees, et cetera, right? So very, very, very important considerations there. So moving on to the how, you might be saying, okay, well, I have a token plan, I've talked to some lawyers, and I kind of understand, what I'm doing here, but I'm not really sure. So, while it's complex, I really want to boil it down to like 3 simple points, right? One is on the legal side, getting legal contracts in place. The other is on the vesting and tax obligations portion, and then lastly on the token distributions, meaning how operationally are you actually delivering these tokens, right? All separate topics, but also very important. So on the legal contract side, we mean, so what kind of legal templates do you want, right? There's a whole ocean of potential ways that you can structure token grants. You have token awards, restricted token units, token options, token appreciation rights, like whatever. Call it whatever you want, but at the end of the day, you need to come up with the right legal structure that's right for your token at that point in time, right? And a lot of that is dependent on the token lifecycle. Are you pre-launch? Are you post-launch? Is there a tradable market for your token? What is the value of your token, right? All of these things are important to consider because ultimately they're going to affect how you distribute your token, your operational concerns, as well as the tax obligations as well. So that's on the legal side. On the vesting and tax obligation side, when we think about vesting, we're like, okay, how long of a vesting period do you want? Do you want a cliff? Do you want to vest on-chain versus off-chain? All those things are important to consider when you're thinking about these vesting considerations. On the tax obligation side, really a function of all your legal and vesting decisions that you've just made, right? Because tokens are typically taxed when they're delivered, depending on obviously the country and your specific setup. Are you a contractor, employee, whatever your employment status is, right? All of these things are important. So that's vesting and tax obligations, and lastly, we have the token distribution / operational side, right? When do I settle my tokens, right? Because vesting and settlement, 2 different concepts. When settlement is actually when you deliver the tokens to the employee. So when do I settle, right? Who do I pay my taxes to? How do I know the right amount of taxes that I need to pay? And what tax authorities do I need to go and actually facilitate these payments to, right? All very kind of important considerations when thinking about, okay, I have a token grant, how do I structure it, how do I maintain it, and how do I operate it? So maybe up until this point, you've been thinking, all right, well, simple enough. I go out, talk to a few lawyers, figure out my contracts, and keep these 3 things in mind, and then I should be set. Well, unfortunately, not really. I know this slide is a little bit overwhelming, but it's just a subset of kind of some of the questions that need to be considered that we deal with on a day-to-day basis, right? Taxes are tricky. It's not simple, especially when you have a team that's distributed around the world, right? Each country does taxes differently, and tokens itself are tricky, right? And there's all this complexity that's out there that you need to take into consideration when administering and offering these grants. So good news is that there is a solution, and that's part of the key mission of Toku here, is simplifying this whole spectrum of token compensation and tax compliance. And the way that we do it is, we've spent thousands and thousands of hours with lawyers to try to figure out, okay, how do I compensate legally compliant in tokens? And what we've done is we've built the legal infrastructure for the Web3 world on ensuring that tokens are distributed fairly. And what we're doing is really bridging this ever-changing on-chain reality with the off-chain world of tax and compliance, right? Payroll, taxes, labor laws have been around for thousands of years. They're not going anywhere. Governments can't accept crypto payments just yet, maybe one day. And that's really what Toku's there, is to bridge that gap. And so what we do is we do locally compliant contract templates, taxable event tracking, payroll integration, meaning who do I pay taxes to? When do I pay them to? Do I and what amount of taxes should I pay on this token distribution as well. And then lastly, we have the automated token distribution, right? Making sure that at the end of the day, the tokens are sent to the recipients' wallets and that that amount is correct. So wrapping up, hopefully some of these topics resonated with you. We'll be here in Berlin all week, so feel free to reach out. As a self-proclaimed crypto tax nerd, we deal with kind of the whole end of the spectrum, so some of your more basic applications to some things more complex. Like, for example, one partner we're working with is like an NFT-based grant structure, right? Where instead of giving an underlying token, you're now giving an NFT, right? And like thinking through all of those considerations, like, okay, what is the fair market value? How do you determine that? When do you distribute? And making sure that that's also aligned with any sort of tax optimization that you can do in that specific country. So in any case, thanks again for joining me. Hopefully everyone learned here and everyone learned a little bit of something if you weren't too familiar with it. I'll be in Berlin all week. Feel free to reach out to me, to myself. Would love to have a coffee. Would love to meet everyone. But yeah, that's it. Thanks, and thanks again for being here.
Thanks. Are there any questions?
Hi, are there rules in place already if you get paid in a continuous stream, like with Superfluid?
So that's kind of what I was getting at with the on-chain versus off-chain vesting. It really depends. So right now, the issue with that is, right now the FMV of the tokens, and again, I'm speaking generally here, right, is determined as when that token actually hits your wallet, right? And so when you have fractional amounts of tokens that are continuously hitting your wallet, obviously you're not going to value every single second of the day to come up with some sort of FMV that you then should be taxed on, right? And so from there, you got to take a what we do is we take like a country approach of like, okay, what's like a reasonable kind of what's like a reasonable amount of time that we can agree on here to where we can settle an FMV and make sure that we use that as the basis for whatever tax withholding, right? So that's kind of one aspect. The other aspect is that you need to kind of break like timing perspective, since you're constantly getting tokens. There needs to be some sort of like cutoff date of like, all right, well, I'll take the start and the end, calculate the taxes on that based upon some of this preconceived notion, and then use that as the basis, right? But there isn't like any like explicit rules that we've seen that say, oh yeah, this is the convention that you use. So a lot of it, and this is kind of like what's new, right? And this is the exciting part of my job, where we can go out and figure out how to come up with these solutions. But good question.
Anyone else?
Thanks. Can you do kind of multi-jurisdictional relationships? So countries in, a company in the US issuing the tokens, and then to people in Europe, Asia, wherever else?
Yeah. So, and again, this is part of like the difficulty of all of this is you're globally distributed teams here, and so when you have these arrangements, right, the first thing that's really important is understanding what the employment and legal structure is, right? Are you dealing with contractors? Are you dealing with employees? A lot of the times we see employees employed via various employer of records, right, which obviously adds like a whole other middleman to this entire process that you need to be able to integrate with and work with. But yeah, we see that all the time. A lot of time you see Swiss foundations that are then distributing the tokens, US companies. But yeah, so it's, ultimately taxes are kind of set where the end recipient is. But again, generally speaking, high-low, obviously each individual situation is different. But yeah, like we see that all the time, and it really comes down to like, what is the legal setup? Are you dealing with employees, contractors, et cetera? And going from there and figuring out like what the obligations are and when.
So another question then. Mm-hmm. Who's your client, right? Because presumably the employer will bring you in, but if the beneficiary is ultimately the employee or the contractor, who ultimately are you liable to?
Well, so technically the employee is the employer, right? Because there's employer withholding obligations, right? If I get paid a salary in Germany, my employer needs to deduct taxes from my paycheck and pay the various tax authorities on my behalf, right? And so typically the employer is the client in this case because they're the ones with the obligation to pay those taxes.
But as an employee, if I've got tokens that vest in 3 years' time, like I live in Switzerland, right? I don't need to value those until I've received them, and I've got them as an asset at the end of the calendar year. So that ultimately is my liability to pay, and not the organisation giving me the tokens.
Right. It depends on what your structure is. So like in Switzerland, though, you also have like I think it's the OASI, right? All these social security payments that you need to make as well, which employers are required to withhold from any payments. Switzerland's a little different example because there's tax at source, right, which may apply to you depending on what permit you have. But again, this is like part of why, like, all right, we understand the employment scenario, try to figure everything out. Where is everyone located? And then you can come up with a flow that works for those scenarios.
You're creating a scheme for the employer, basically.
Exactly.
Brilliant, thank you.
More questions?
I think one back there.
Sorry.
In terms of simplifying potentially off-ramps or streamlining, could you speak maybe towards GECs, global employment companies, or maybe bridging out toward CDBCs on the horizon, and whether CDBCs potentially with composability may help some of these problems?
Yeah, that's definitely an interesting question. I think the whole CBDC landscape it's probably gonna, if they ever do come, right, which we know they are in a few countries, like it's gonna totally change this entire flow, right? And it's something that we're thinking about, of like, okay, understanding that, well, I said before, governments don't accept, crypto to pay for taxes. Not yet, but maybe they will, right? And then thinking about, okay, how does that change this entire flow from employer payment of employee withholdings, right? And so yeah, it's a good question. It's something we're thinking about. Hard to say, right? Some sort of global employment company is also an interesting idea that we've started to think about. Like, would that work, especially if you're part of a DAO, right? Because that would simplify tax withholding obligations, would also allow full-time employment, which is important in countries like the U.S. where you have benefits that are contingent upon employment, right? And so yeah, all interesting questions. I don't know if I have an answer. I can probably tell you what I think, but we'll see.
More questions?
Right now, it looks like your clients are mostly crypto projects with employees or contract workers. But can your software or solutions be used by other companies that help individual freelancers?
Got it. Yeah, so our sweet spot is really like you said, on the employment and contractor side. This stuff is complex, so like we're thinking about a potential self-service solution, but a lot of the times you end up needing to bring like a lawyer in anyways, or some sort of like HR expert or payroll expert in that country, which we all have in-house anyways. So it's like, we haven't really seen the need to be able to have like the self-service solution just yet, just because it is complex. And like we just talked about with the Switzerland example, right? It's totally dependent on what your setup is. Never say never, right? I think it's something that's interesting, but right now it's very much something that we want to be a part of, because it's like I said, we don't want you guys to like set something up and then all of a sudden have to go out to law firms and pay tens of thousands of dollars to do research that we already have in house, right?
2 more questions. Do you help with tax reporting and accounting?
Yep. So in terms of like when we run like a payroll process, that all kind of gets calculated in house by our tax engine, and then what we'll do from there is then export into various accounting formats, and then that ultimately can get uploaded into various ERP functions as well.
And my last question is about which country or legislation is the best to reduce taxes?
not tax advice, but I'm sure a quick Google search might give you a few answers. But you know, if I could answer, I would. But hashtag not tax advice. None of this.
One last.
Have you seen any governments step up to the table? Like, how come the US government isn't creating Taxman DAO and that we can just go to directly? And like, where are they in the builder space? Have you been reached out in that sort of sense?
Yeah, so not directly, but like what we have seen, and Taxman DAO, by the way, is tremendous name for any tax authority. You know, so you know, I'll keep that one in the back of my head. But yeah, I mean, I think the whole CBDC question is also kind of key into that, right? Because in theory, if the government knows exactly what you're making, they can calculate the taxes for you and withhold it, right? But you know, you could probably argue that like if they know it anyways, they could have done that within the Web 2 world as well. If like your employer just says says to the government, here's a salary, here's what to withhold. But in any case, so like it's an interesting concept. To be honest, like I don't know if we're gonna be there anytime soon, right? I think governments are still like trying to figure out how to tax tokens in general, right? Let alone, you know, taking steps to be that intermediary, right? To kind of facilitate all of this. So I think we're still a ways away from that, but you know, another kind of interesting consideration, potential, you know, 15 years time, you know, where we might be. Awesome. Thanks everyone.
Thank you.